Good weekend. Ira Epstein with your weekend edition of your Spider ETF video, and this is for Friday, the 18th of February, 2022. Well, we did see that President Biden came out this afternoon. He believes that President Putin of Russia will make the invasion call. It could be any day. You know, it's amazing that they've waited until pretty much the end of the Olympics. Maybe he ties it to that. I don't know. We have President's Day week coming up this week, so the financial markets in America for a whole will be closed on Monday, not futures. A lot of the futures markets are open. They open Sunday night, many of them at their normal time. Then you trade until an abbreviated session on Monday. Then many reopen at 5 o'clock in the afternoon again. I will not put out this update, though, until the Spider update until Tuesday. Obviously, the markets won't be open, so why would I do that? And I'll wait for it unless there is an invasion, and then I can talk about the futures and what they're saying for your reopening of stocks on Tuesday morning. So we'll cover that. There will not be a live webinar with me this week. I already know it. I have to be out of the office on Thursday, and that's when I've been doing these. So Thursday afternoon, I have another appointment. Could not change it. So let's talk where we're at. You have to understand that the market's in a wartime mentality, and after that, the next mentality, literally right behind it, is we're already at the 18th of February. You're 10 days away at the end of the month, and then you're into the FOMC meeting, 3 weeks from now, 4 weeks from now. So the market will be worried about that. The numbers we've been getting have been bullish in terms of inflation. Nothing there to turn that off. So I would assume that each time we're looking at the reports that are coming in on inflation, how could they be bad? I mean, be it oil, be it price of grains, meats, it doesn't matter. You've seen markets going up, and more people than not are getting jobs. Then we're going to get even more jobs as we go into the spring, and the outdoor help is needed, and the parks, the destination parks people go to. So I am quite bullish on the U.S. economy, regardless of what Russia does, and regardless of the interest rate scenarios that take place, because I am of the camp, different than many, probably wrong, that the Fed will not make 7 interest rate hikes. It won't have to. I believe that inflation in other parts will tone down with the help of a few hikes, maybe 3, 4, something in that area. And if the economy does what I think and just starts falling back, as one of the Fed governors, Mr. Daly, came out today, I wrote about it, I'm pretty much in his school of thought. That's your New York Fed president. So we'll see if this happens or doesn't happen. All right, but that's very much the school that I'm in. When I look at Facebook, there'll be a number. I can't tell you what it is that this market finds its value. It has a history in Facebook of getting beaten up and coming back. And I know everything's terrible about it, and that's the way it is. This market reminds me of the valuation. You've just gone from 375 to 200. Think of what ARK has done under Cathie Woods. That was a $160 stock at $75 now. So, similar, companies not going out of business. Cathie's investments aren't going to go off the board, but you take beatings at times, and that's exactly what's going on. And Facebook had a ride. I understand what they're trying to do with rebuilding the culture, because you can't stand still in that technology universe. But as you and I look at the chart on a weekly basis, a lot of trouble there. The trend is clearly down. Market's been coming down here. You're under both the 200-week, the 100-week, where the heck's the Bollinger Band support, and you have 2 weeks in a row under it now. You know, you can go to 5, so there's time for it to bleed a bit more. Momentum still pointing down. Trend down, bias down. The problem is, if you're a bear and you're playing off a weekly chart, where do you put a stop? You're going to put it back over up here, 328, and you're selling the market at 205? I don't think so. That becomes the difficult part. So is this rotation out and people just taking money in and long-term investors looking at it? I don't know, because a weekly chart's a long-term chart, and it looks terrible. KBE, what we have is a market with higher lows and lower highs. Very much stuck in this sideways zone. What's frustrating to the market, especially the banking industry, is the curve yield flattening so much. Now you're taking the opportunity for the banks away. Originally, you had interest rates down here, maybe they'd go a little bit, and we thought that the longer term rates were going to go up. But now the market shifted gears and says, all the pressure is going to be in the near term, so they're lifting that. And the longer term, people think inflation's not going to be as bad, other things, and they're not driving those longer rates up. Well, the spread narrows in, and you're seeing it on stocks like this. That's what people are talking about. If it weren't for the trading of J.P. Morgan, Citi, and some of that, I question what their banking would look like. You'd have to remove that part of it to find out. In the weekly bar chart, you're down here on the industrial part. I've been bearish telling people, but ultimately I'm going to be bullish. I'm waiting for the turn with the end of the pandemic to turn this around. But right now, it is not a buy. It is a short cover, for sure. That's what I would be telling you if you were next to me. Trend down, bias down, but you're hanging at the lower Bollinger Band. The energy market, it's like glue here at the top of the upper Bollinger Band. You have an embedded reading. I am not leaving the bull camp until the red line closes under 79. So until that occurs, I think this market remains a buy on these breaks, looking for the upper Bollinger Band again until it runs its course. On the SPY, the trend is down. But what you did this week is you came in with a downtrend. Lower highs, lower lows, bias down since you're under the 18-week average, momentum down. Target, 435.89. You now hit it. Now what do? So I think the pros took money off the table going home this week. Emerging markets. Big problems. If we're not good, how are they going to be good? So lower highs, lower lows. Now, a lot of people think, this will be the place to be. So let's assume you're that school. How do you know that's the place to be? Because if the market clears now 50-11 on this formation, you'd end up with higher lows, higher highs over the 18-week average. Momentum at that number would turn itself and keep this pattern of up or flat, and you'd be targeting 52.15. Converse. This is the support that's been holding the market, the 100-day average past 3 weeks. This gives ground, lower Bollinger Band, 46.97, a strong possibility. In the metals, if you really look at this market, it's been going sideways. Just take a look from right about here. Since September, that's what the market has done. It pokes its head up occasionally, gets itself over that upper Bollinger Band, but has a tendency not to stay there. Is there any signal here to be short? No, none at all. You got higher lows, higher highs. But there are signals you may not want to be long, because being long often doesn't do much for your financial health when you're over the upper Bollinger Bands. So you pay attention to that. Very big difference between being a short over this market and maybe not want to be overly long. Gold miners got up to the spot this week where I think the pros took money off the table. The 100-week average, the upper Bollinger Band, it's pretty strong stuff, just the way it was down here. Remember when it was falling apart? I'll bring you there. And I was saying that's where I think the pros are covering. Now I think the pros are covering right up here. Same type of scenario. ARK. I read Kathy Wood's statement as to how she thinks the market is doing her fund serious injustice. They're not valuing this portfolio right. Okay, but it is down, Kathy. You're at $64.80. You were $160 here. You have lost, for all purposes, 2/3 of the value of that on this chart. Okay, and I agree with you. The stocks you own, maybe at this price, get very interesting. I see that, but the chart hasn't turned, and you and your group are chartists. Besides good fundamental traders, you have to get through first. 68.25 to negate the downtrend. You have to get rid of the bearish embedded reading. Then you begin the process of getting back up there. Until that occurs, the target is still the $56 mark. Amazon's still in a bearish mode here. You've got the lower highs, lower lows. The market's not holding the 100-week average of closes. you could easily get back down to the 2863 level. The reversal in it happens if you can clear here, right here, last week's high of 3276.69. But you haven't done that. You're adding to the pattern of lower highs, lower lows, which is bearish. In Apple, I still, on the daily charts, I said I thought it was going to fall back, and I still do. I think the market's a candidate to come back into this 165 level to see what it's made out of. The pattern is not bearish. The pattern is corrective. There's a huge difference because the market is staying over the 18-week average. Close under it with this pattern, it turns bearish. It hasn't done that. So it's a correction into the support that I'm looking for. You do realize that over the past 2 months, very quietly, Tesla's given up the 1200 level and it's back to 850. I mean, these drops are rather severe. It's in a downtrend. It's got lower highs, lower lows. Its target is 802.30. In order to break the downtrend, you've got to get back over the last rally high, which is this week's of 947.77. No, I don't see any reason that people should be picking it up yet. TLT, well, all you're doing is, this is the Gorilla Glue trade that I tell you about. It's when a market latches on. It's like a leech. It latches on to the Bollinger Band and it doesn't let go, and it just sinks away into oblivion in a downtrend. So let's assume the invasion happens. The first rally spot should be the 200-week average at 140.61, but you have to get over 144.37 to negate the downtrend. You're oversold, I get it. Well, that's it for those charts right now. I want to remind you that for these spiders and ETFs, you know, Monday through Friday, without a holiday, you know, we have President's Day this week, at 9 in the morning I start recording and I cover 41 charts for you. By the way, these are some of the charts I cover. We rotate them. On the weekends, which I'll do this weekend, I cover them all again, but only on the weekly charts because I want to give you the long-term analysis as to what you might decide you want to hang on to and so on. And then I also do special reports every now and then. It's Saturdays. Tomorrow I'll sit down and start recording those weekly charts for everybody, get them out of the way. Then I'll do bonus videos. This is all included in my subscriptions that people take to my different services. My idea is to give you an idea from, I've got 52 years of experience doing this. It's a long time. I know the fundamentals. I talk to them about them. Technical chart analysis, you're in my backyard with that. So how do you get to see some of this and take advantage of it? Maybe even on a basis, free trials, whatever you want. Go to our website. It's all explained under the word research. Look at it. There's a short video about it. See if that's what you'd want. I'm Ira Epstein. You have a great weekend. Let's see what happens this weekend. Daytona, though, Sunday, beginning for me of the spring season. I know it sounds nuts with all this bad weather, but once cars go, I go. I'm Ira Epstein. You have a good one.